2/11/2012. We have the SMF trading platform right here. Yeah, boy, is it nice. We're going to take a look at the S&P 500 daily chart and how it started the 2012 bull scenario versus its last year bear scenario when we put in all these bottoms here. And the rally started here. That was the calendar year. That was your beginning bull of this new rally for 2000, and that this is how it was ending. But when we get over here, the rally starts, it tests like every bull should, and you can see here the expansion, and each one of these delta lines are 4.84 movement. What we will do is feature the S&P bull rally, but we will feature the fact that the S&P has had a great start of a new bull. However, let us not be complacent. How do we buy into the next round of that bull trend? Well, I can tell you, we hit the peak here at 1351. Last year's calendar high on the S&P was 1372 or 1370.25, way over here where my pointer is. And you lost 295 points with the bear took it down 295 points. Now, having said that, for the 2012 period, from that low of 1200, it's had 150 point movement within the bull. We're overbought in the short term of this new bull. When we come down to the support levels from any great bull trend or any great bull rally, bulls must pull back to create buying opportunities for the money on the sideline to get off, to get in the market. It's sitting on the sideline because nobody believes in the economy or the worldwide event. I'm not going to go into that. What I'm going to go into right now, we already know that. What we're going to go into, though, is how 1320 on the S&P is going to be a first level of bull support. Okay? That's this where we broke higher right here and we rallied up 30 handles on the S&P. As the S&P pulls back to 1335.78, which is that half bar, we're going to watch the daily moving averages. We're going to watch where resistance, where the daily breakout bar right here would be our support level at 1327 because that's that daily low end of that bar. And it also was a key major resistance level right here. So here, let's blow up this part of the chart on the S&P. This will be the first bull rally pullback. Every bull has a pullback, or every beginning new bull rally. Doesn't matter about what the economics are. Doesn't matter about what's going on around the world. They've discounted it. The thing about it is, it was long overdue to get back up and challenge these highs. And it got too overbought, so it had to pull back to this 1335 handle, which is half of this bar at 1335.78. And it held support. Moving forward, we're going to look at how to buy calls on pullbacks in the S&P. We would like to see where great bulls shake out right back where it started, right here at 1305. So that every bull rally has to have a bull pullback. That's where new buyers would engage, and we would make higher highs on the S&P 500. Right now, what I will tell people is that we're currently overbought, and we're due for this pullback. I didn't say that it's Armageddon or a big bear move. Didn't say that. What I did say was that every bull has a pullback, and every bull should be bought when new bull rallies start. We're going to be looking at how we can position ourselves with these pullbacks and what those up and out of the money calls would look like. I can tell the MMTs right now, it's going to be a nice trade. It's going to be a big trade. And that throughout the calendar year, we could get as high as 1425, which is 7.5 deltas up. Of course, that's 82.88 handles from this level to that level, okay, in here. However, when we look at where the pullback should be, we would look to see that if we could pull back to 3.5 deltas negative, which would be $38, from now to there, or from getting to that point, is that at 1303, that's going to put this right back down here where the base of the bull started. How far it would go, it took out resistance. We've ran the course. We will be teaching the MMTs how to buy where the call and the put side, call to put to call ratio, put ratio is imbalanced. But when those pullbacks come down in here, we will be all over those calls up and out of the money 90 days out. Because I will tell you that the S&P pulls back before spring gets here. It's got to pull back to set up a new base for a spring rally. Then after the spring rally, you would have a pullback going into the summer in about July, mid-June, July, depending on where we're all at. But the thing about it is, then you would have a summer rally. So within the rallies, buy the pullbacks, keep the stop markets. We'll be buying calls that are inflated that will pull back to a point where they can be bought for great gains moving forward on the bull S&P 500 daily chart in the bull SMF direct access trading platform. So we're going to be looking at how we hold the key levels at support. This one's going to be 1322.61 in this bar right here. That's where we made the highs. Bull pulls back. Bull makes another high. Bull's going to pull back down in here, and we'll go up and break those highs. The highs that we're looking at breaking is a 1370 to get us up there to the 1390 to the 1400 on the S&P throughout the calendar year. Buy the pullbacks and sell the rips. S&P 500 is currently in a bull market stage starting 2012. On the S&P 500, buy the pullback, get in the calls, and sell the rips.